Now, we're looking at, a lot of people have gotten this feedback, and it's so interesting to me, saying, well, but bonds are telling us one thing. Well, the reality is that central banks are controlling the bond interest rates, not just on the short end, but also as well as the long end. So I don't think that that is really letting us know what is going on. And with stagflation, obviously you have rising inflation with slowing growth. And we have some really interesting things that are happening in these markets right now that tells me that in many ways we could already be there. But when I hear people say, well, this is not the same as the 70s, the stagflation of the 70s, I think they are dead wrong on that. And the reason why I do is because we are in the process of resetting the fiat money system. We're doing it in every area, socially, economically, as well as financially.
Why impact and why Mexico? So if simply put, it is currently easily the largest silver producing country in the world, with nearly 30% production coming annually. On the top right chart, you'll see that here. In terms of investment attractiveness, even with some of the South American countries push towards more socialist tendencies with the recent election changes in Peru and Chile, Mexico remains one of the best countries to be in South America. ESG has always been very important for us. We obviously generate most of our jobs locally. We have 99% of our staff being South Americans. And again, foreign companies can't hold title. We've been here for 16 plus years. We believe we're just scratching the surface. Our property has been in production for over 500 plus years. So where we are is we're in an area called the Royal Mines of Zacualpan. The map might be a little small, but we're about 2.5 hours southwest of Mexico City. Why here is this area has seen production since the 1500s, right? So back then, clearly there were no excavators and power lines and power tools. So people were mining with hand. So you can imagine that the grades had to be so good that it was economical to do that. A bit of the top chart here, you'll see our production profile has varied throughout the years, but we're around 500,000 to 1 million ounces of silver. So very much a boutique cash flowing story, but we're very much ingrained in the local Mexican culture. For the most part, our local employees all think we're a local Mexican company. And we have to take that as a compliment. As I mentioned, we've now produced nearly 12 million ounces of pure silver. We don't report any equivalents. And that's really the proof in the pudding, so to speak. We don't believe we just have silver in the ground like many peer groups out there. We actually produce it on a daily basis.
No, I completely agree with what Lynette said. 1 ounce of gold is worth substantially more than 1 ounce of silver. So for a store of wealth, it's far easier to store wealth in physical gold. Storing a lot of wealth in physical silver takes quite a bit of space. And so I think that's a kind of tried and tested, well, it's a known fact. So silver, was used more of a medium exchange. But they both. I mean, personally, I think you should always be diversified. And I think this is an interesting thing about the sector. That in a world where the stock markets are so expensive, it just seems people just keep buying the same stuff rather than like venture into like a risky stock like Barrick Gold or Kinross or whatever. They want to just buy more Apple or more Amazon. But that's going to come to a tipping point, and things are going to change. But still, I can't remember off the top of my head what it is, but it's like less than like half of 1% of pension funds are allocated to precious metals. So all it takes is, a little bit of a move into the sector, and you're going to have a substantial change. There's so much money sloshing around in the financial markets, but it's not coming into gold still. It's still very, very low. But that gives us an opportunity, and you have to be patient. Things don't happen overnight, so it's all a relatively short period of time. I think buying at this kind of point in 10 or 20 or 50 years' time, you will have done well. These are finite assets, that it's getting harder and harder to find. They're not going to go away. Like Jerry says, you buy a Hong Kong apartment, you own a bit of land you don't even own the land, right? You own a bit of air in the sky. If you don't pay your management fee, they can take it off you and all kinds of stuff. Where I live now, they're trying to get us to pay $300,000 for an updated swimming pool. And if you don't pay it, that's Hong Kong dollars. It's not US dollars. Then you know legally you can lose your apartment. So there's all kinds of stuff. You know, that are not anywhere near as tangible as gold. And, you know, obviously cryptocurrencies are very, very new. They've got a place now in the financial sector and become interesting. But, you know, it's going to be an interesting period to see how tangible these assets really are. And already you see a lot of stories where people are losing a lot of value because they can't remember their password or they, you know, all kinds of stuff. So gold and silver has had a place for a long time. It still has a place, but yeah, it should be a percentage of your portfolio. I think, don't go all in, but definitely have it there.
We are definitely heading to more money printing. I mean, I know that Fed Chair Powell, well, first of all, I think it's really interesting that finally, after so many months of calling inflation transitory, he's starting to acknowledge that, no, not as transitory as we were saying. And additionally, they're going to continue, they may taper, so print a little bit less new money, maybe starting in November. So, I see more of the same. I see a melt up circumstance happening. I don't see them having the ability to raise interest rates, and they're talking about it years into the future anyway. So it's really pretty much a joke. But the currency is dead. I mean, it's dead. The whole system really died in 2008. So that's what I say. I see more and more money printing because they have no tools left. There's no interest rate. They don't have the ability to utilize the interest rates to regulate inflation anymore. That's why Turkey's experiment is really interesting. And I think we need to pay attention, lowering rates into inflation.
So the chart we had earlier for our shares, and most silver juniors would follow that trace. I believe Reina Gold, which is Michael's group, was follow very similar. I think we all had a phenomenal 2020. Beginning of the year, I think we started off in 2020 pre-COVID in Mexico. We were doing a site visit with I think a few of our mutual friends, Lynette, Robert Keynes from Gold Silver Pros and Wall Street Silver's guys. And this is before Wall Street Silver. They had 1,000 subscribers. Now they have 90,000. So it's not that long ago, a year and a half ago. But we were at 20 cents. We were breaking even at $20 silver pre-COVID 2020. And lo and behold, silver dropped to $12. I think during COVID, flash crash, liquidity crisis. And within a month after April, as kind of the world sorted out, starting to kind of figure out a path forward, silver, gold started running, right? Silver ran within I think June to August to nearly $29, and then subsequently through the end of the year in early 2021, with silver squeezed to north of 32, 33 per ounce. So in that time period, most of our silver peers and ourselves, we saw the share price go from a low of 15 cents to north of $1.20, right? So silver, last I checked, did not go up 8-9 times. Silver went down as low as $12, went to a high of 31 roughly overnight in February of 2021. So again, that kind of gives you an idea. Silver was up maybe at the peak of 300%, close to 300% return, whereas most junior leveraged silver producers and small caps were up anywhere from 500 to over 1,000+% return, right? So that kind of